Welcome on board Nischal Maheshwari then. Nischal, hi, good morning. Wish you a very happy new year from all of us. Nischal, how deep could the damage be as the government has now notified this very sharp rise in excise duty for cigarettes? Nischal, you'll have to unmute yourself.
Oh, sorry. Sorry. Very happy new year to you and your viewers. So I think there are two elements to this. One is basically the surprise. Nobody was expecting this. I think the budget is around the corner. People expected that this is going to come along with the budget and such a high number also. I think that is the second thing. So that's why you've seen this kind of a very big reaction. Now, as I go through the numbers, I do agree with most of the people basically saying that they need to take anywhere between 15 to 25% increase in the prices to just get back to the original volumes. So I think for the immediate future, I think there is going to be underperformance because passing on such a high increase to the end consumer is not going to be easy. So either they have to be, what I believe basically is partially is going to get absorbed and partially going to get passed on. And you are going to see downgrades happening from the consumer side. Somebody who was smoking a 20 rupee cigarette will obviously the price will go up to 25. So he will downgrade to a smaller one. So I think that that's going to happen, but it's going to get absorbed. We have seen historically much steeper increases getting absorbed, but it's going to take a bit of time. So I think the underperformance in the sector will continue.
Nischal, does that really happen that people downgrade cigarettes from 25 from one brand to another? I mean, I'm not a smoker, but people who smoke, they continue with that, maybe reduce the number of cigarettes they smoke.
So I'm also not a consumer, but this is what I gather from people basically who do smoke. And they said that the immediate reaction is basically that we just maybe just take a different variant of the same brand, a smaller one, and or the same company basically, and that's what it is. But obviously there is a price insensitive a segment which will not bother about it. But that price insensitive segment is a very small one.
There's another big one which has happened is the consolidation in the QSR space between Devyani and Sapphire. What's your take on that?
I think that's a good one basically because it's if you look at it, the Yum brands in the US is of the same company. Here actually it was getting represented by two. So definitely we have to see how the benefits which they are claiming of around 200 crores really work out, and it's going to take a bit of time. But I think consolidation is a good thought process here.
Right, okay, that's Devyani as well as Sapphire and how the merger is going to play out. There's Electra Green Tech as well. They've, commissioned phase 1 of their EV bus plant now in Hyderabad. It's going to be a capacity of 2,500 buses per shift. Look out for what this stock does. There's Oro Pharma as well. One of their subsidiaries has acquired a non-oncology business of Khandelwal Labs for about 325 odd crore rupees. That's the other one in focus. And then Railtel, which has bagged another order from Assam Health Infra Bodies. So that's the other stock which we're going to be keeping on our radar. Of course, the Motown sales and the fact that the CV segment has actually stood out quite smartly. Though for Hyundai, I was just looking at that. It's been a very neutral or muted sort of performance for the December month. Their sales have seen an uptick of about 6.6%, exports higher by 26.5%. So largely this is in line with what the street was anticipating. Two other stocks that you need to look out for, and the lock-in expiry is today. So that's HDB Financials of about 58% and Allied Blenders of about 20%. Look out for what HDB definitely is going to be doing in trade today. But just looking at some of the other buzzers and looking at what's happening within Telecom. And Kunal, let's chat about that. Indus Tower, hugely volatile of late. Vodafone, of course, we've been tracking that story. And then leadership names like Bharti.
I think Bharti and Reliance, largely to a larger extent, I think both of them will continue to perform, far better. Vodafone Idea, I think, is the, I would say, jack in the entire pack, because that's a stock which I would believe could probably, stand to a chance of an outperformance. So we need to see this over the next 1 to 3 years, that the stock will get into that zone of a major outperformance. We've seen the last 2 years being a lot more positive for Vodafone Idea. The stock moving from that 6.5 to 7 club to now 10.5, 10 to 11 plus kind of a mark where it's trying to settle into. So there has been news flow which has been negative for the stock price every now and then, but the stock price has managed to absorb the negativity and try to make a higher bottom for itself every now and then. That I believe is a very strong positive signal for Vodafone Idea. I was looking at the quarterly charts for the stock, and there are strong indicator breakouts, a parabolic star breakout, etc., which has happened for Vodafone Idea. That generally indicates that we are looking at a major quarterly reversal for the stock price. And when you are into that kind of a quarterly uptrend mode, you have to find those odd periods where the stock drops 10, 15, 20% and try and take opportunity of those corrections as a good buying opportunity.
Nischal, I wonder whether you have a take with regard to auto and some of those numbers impressing, at least on the CV side of things.
Definitely. I think autos, at least I see that that GST cut was not a one-time thing. Yes, there was a pent-up demand basically which got absorbed. But what we have to keep in mind is basically the GST cut is a permanent one. And the vehicles have all become cheaper by 1 to 2 lakhs. Now, that's quite a good number basically. And secondly, with this interest rate coming off, I think these are two definitely positive signs for the auto sector. I think I would actually go ahead with the PVs first and thereafter the EV and the two-wheelers in that sequence.
And how would you play it, Nischal? Would you play through the auto ancillaries? Would you play through the OEMs themselves? Would you play through distributors, if at all that's the case?
No, it would be definitely OEMs and then auto ancillaries possibly.
Okay, and names, Nischal, any names that you can give us in terms of a preference, in terms of pecking order, where risk reward is favorable?
I still think that Mahindra is the top pick as far as the PV sector is concerned. That continues to do pretty well basically and has got a long holding period as yet. Then in case of auto ancillaries, I do not have any specific picks there. But in case of EVs, I think Ashok Leyland is a clear winner there. And in case of two-wheelers, it's TVS.
Kunal, while we have seen leadership from these names like an Ashok Leyland and M&M, what's likely to play catch up within the entire Motown pack?
So 3 stocks in that sense. Hero MotoCorp, which is, there are 3 underperforming names in the entire auto pack and ranked in the order from, the better ones towards the most underperforming names. Hero MotoCorp is the ones which is underperformer. Bajaj Auto ranks number 2 and then Tata Motors PV. I think all 3 of the stocks are now looking, quite refreshing in terms of a potential turnaround. Hero MotoCorp just, I think, last week or so, or start of this week, managed to hit a low of 5,500, 400 levels thereabouts, and now looks very strong in terms of a potential reversal. And my expectation is that the stock could clock even 6,000 to 6,400 in the next 3 to 4 weeks, and that's a decent upside of a potential 8 to 10% for Hero MotoCorp. Bajaj Auto is something which I would believe should be getting up for a break above the 10,000 levels. And Tata Motors PV, I think, could be into a massive turnaround. The stock is still reading below its 50 and the 200 moving averages. And even if there's a mean reversions towards 200 DMA, there could be a jump of at least 10% into the stock price. The 200 DMA is around 406, 408 mark for Tata Motors PV. So that's another name to look out for. So my sense is that now with the sector going to the second stage of the rally, it's time to bet on the underperformers to get that extra bit of alpha.
Okay, that's the take coming in on how some of the underperforming names within Motown could actually play catch up in 2026. What else is going to be moving? We'll address all of that, but after this very short break. What is your view on IT and whether this, rebound that one has seen play out in the last quarter is actually now going to translate into earnings or not?
I don't see any bigger change basically happening in IT for the moment. I think so. 2 things. One, as far as the AI trade is concerned, as yet it is not translated into the services side of it. We are largely seeing investments happening basically on the product side of it. So that I don't know how many Indian companies have got any orders or something. I think that transition is going to take, I think, at least another 3 to 4 quarters to happen where somebody starts saying there are some use cases and they have started getting orders on that use cases. So that part, I think at least 2 to 3 quarters away. We do not see any major stuff happening out there as far as IT is concerned. Secondly, I think upgrade in earnings, still I see most of the analysts are talking about at best a higher single digit growth. So I think that is already priced in pretty well. If you look at the valuations which you're showing on your screen also, I think they're pretty well. So PEGs are less than half basically at the moment. More than two at the moment, sorry. And I think that is not a very interesting case.
Nischal, where else do you see a pocket of value? Where else is risk reward favorable?
So 2 or 3 sectors which I see definitely. One is banking for sure. I think that is one sector, both banking, BFSI. I wouldn't say insurance is to that same extent, but I think the whole other sector is pretty good and reasonable. I continue to see that there is going to be some traction again in the stock marketplace because I think volumes which had sort of dried off in the last year, I think we are going to see some rebound in volumes again in the current year and expect increase in the Nifty values also. So definitely you're going to see better things happening. Auto, we spoke just now. That's another place basically which I see a strong rebound happening. The other one is some individual sectors, stocks and all within the sector. So I think these are 2 or 3 places basically which you are going to see good valuation, good rebound happening in the current year.
Okay, that's quite interesting. Kunal, are you in sync with that view, both on IT as well as banks?
See, I believe that banks, the mixture is going to improve in 2026. The private sector banking stocks will make a comeback for themselves. That is a very strong trade, which I believe should pan out in the first half of 2026, because you can't have a point where the bank Nifty is heading towards 60,000 and the private sector banking names, the large cap stocks would keep on underperforming. So there's bound to be a point where that mean reversion could happen, and I think the process has already started. You've seen Kotak Bank coming back towards breakout of 2200 mark. IndusInd Bank is now inching towards a break or closing that huge gap which was seen in 2025 start around the 900 levels. ICICI Bank is the only underperforming name, and HDFC Bank has been more sideways. But I believe that these stocks will eventually make a strong comeback for themselves. So that I believe is a strong trade. IT index, the move is getting a little bit more tricky because now you have large cap IT stocks like Wipro and TCS, which are looking a little bit more better than the likes of Tech Mahindra and HCL Tech, at least in terms of near-term momentum. So the mix is getting a little bit more better for the IT index. But I believe that there could be a point where the IT index may remain sideways, and if these stocks correct by 5-7% margin, that's going to be a point where traders could look at a buy.
Okay. Metals is the other pack which has done fairly well for itself, Nischal, in the year 2025. You expect that run to continue in 2026?
Yes, I think metals. So if you really look at it, it's started with the precious metals, and now it has moved on to the. So I'm saying the asset ownership that is really making a strong comeback. So we have seen starting with the precious metals. I think this is going to now start trickling down to the non-ferrous and thereafter ferrous. So I think at least for a quarter, I see strong performance happening in the metal sector.
And Nischal, one more possible moving piece is realty. It's sharply underperformed. Where do you sit with regard to a view on realty?
So if you really look at it, reality, I think as a business, it's doing well. There is a strong demand basically on the ground, both for the offices as well as on the consumer side. But the issue remains to be basically the growth levels have basically not kept up with pace. So what was growing at 25% last year, maybe now it's, I'm just giving you a ballpark number. I don't remember the numbers basically. What was growing at 25 is now come down to 20. And the valuations still continue to remain strong. So that's why I think the reality is underperforming. I think that underperformance may become a sideways kind of a move this year. But once we see growth coming back, I think reality should start performing again. So I'm still optimistic about the reality space.